So on Friday, all three main US averages traded sideways for the day as Treasury yields and the dollar gained in response to hawkish Fed remarks and a stronger than expected University of Michigan Consumer Sentiment Index readout. We actually saw the market slowing down and beginning a bit of a pullback on Friday for the first time in pretty much a week. And that is something that I did want to talk to you guys about today. I wanted to give you guys a quick update on the overall market, the technicals on the charts, some of the key economic data, and how it all comes together and what you guys should be expecting. There are a lot of signs indicating that the market is extremely overbought. So I do want to give you guys a little bit of a warning so that you guys are aware of the situation and that you guys know where I stand with the overall market, where the charts stand, and hopefully that helps you guys make a better investment or trading decision moving forward throughout this week. So looking at the charts right over here, last week what we did, let me go ahead and grab a drawing tool. So last week, when we talked about the market being overbought, we were looking at the RSI extremely overbought. We were right over here, and we actually saw this pullback happen right here. The week before that, we were at a resistance. We saw the market extremely overbought, and we saw a pullback. And what we're seeing this week is similar to what we saw the first time around. We are extremely overbought. We are at a resistance right over here at that 370 mark. And we are expecting the overall market to see at least a pullback back down to this support level that we've been trading along this entire time since this rally started after this consolidation period. So if you guys have been following along with the channel, you guys know that every time we do these call outs or we do these warnings, we actually end up seeing these pullbacks panning out. And so what we're expecting to happen this upcoming week is a very similar scenario. Possibly worse than previous times where we don't find support, but at the very minimum we do expect the price action to drop to at least this 362 363 zone, and that wouldn't be surprising whatsoever. We are, like I said, extremely overbought here on the MACD and the RSI, and we are showing signs of pullbacks in both. So let me go ahead and clear that up. The current situation that we're in right now is we're looking at the daily chart, and we are at this 370 resistance zone. We broke a little bit above it. You guys will see that once we jump into smaller time frequencies, but for the most part, we got rejected at this general zone at 370. And so what we're starting to see here is starting to see a pullback, and we started to see that on Friday after the Fed meeting, after the FOMC meeting, and we saw Jerome Powell announce that they are pausing rates, but they are anticipating that they might have to raise rates moving forward towards the end of the year, and that they actually expected the rate to be a lot higher than it is, not a lot higher, but higher than it is right now. And so what that's telling us is that we are in store for more rate hikes. And if you guys watch some of the presidents from the FOMC, from the Federal Reserve, a lot of them are saying that, they are open to raising more rates. So they are expecting rates to continue to go up. And the reason for that is while we have seen a little bit of a decrease in inflation, the core CPI is actually staying pretty flat, which indicates to them that it's not really doing the job that they were expecting it to do. The rates that have been hiked aren't doing the job completely. And while we slow down with inflation, it is starting to come down a little bit. The core CPI is actually still staying flat. And so that's why they are considering more rate hikes. And what that means for the market is the more we see rate hikes take effect, the stock market does tend to sell off once those rate hikes are in effect, right? Because we saw a pause, we actually saw more of a rally. We saw the rally in anticipation of a pause, and then once the pause was announced, we actually saw more of a push up to the upside. But that does not take away from the fact that we are extremely overbought. If you guys look at the RSI, we are extremely overbought. We are at a resistance from back in April of last year. This is the resistance level from then. And then we are also starting to see a change of color from this green color to purple, which is indicating that the momentum, the convergence is starting to take place, and we potentially might see a sell-off take place in this upcoming week. And that would really align with the fact that we are overbought. We do need some relief in the market. If you guys see that we've been going pretty much since the beginning of the year without seeing a pretty serious correction. We saw one right over here, and then that was pretty much it. We saw one back in February into March, and that was pretty much it. Ever since then, we've been rallying. So we do need a bit of a relief in the market if the market does continue to rally, or if it wants to continue to rally, right? It can't just keep going up. That's not how the markets work. So if you guys have been trading, you guys know that. But that's just the general idea here behind the chart on the daily, right? Let's go ahead and jump into a little bit of a smaller time frequency. So let's go ahead and jump into a 4-hour chart. The daily is really giving you a bigger idea from the general picture, right? But we do need to see something a little closer to give us a better understanding of what's going to happen in a more immediate future, right? And that is for this upcoming week. And so, again, we were extremely overbought. Just to give you guys an example of what we're using to identify these opportunities, saw a pullback, we pushed down into not overbought territory, and then we pushed back up into overbought zones here on the RSI, and then pulled back down, which we saw right over here. And now we pushed back up into these overbought zones. This is just a 4-hour chart. And we are in this overbought zone here at this resistance level. And we have already began our sell-off on Friday into back down to not being overbought, right? So we are anticipating a move down to at least this zone right over here, which would put us at about 360, 359, 360. And that's just if we respect this trend line that we've been pretty much holding for the last, I would say, month or so, as this rally has been going on. So I would anticipate us pulling back down to here at the very least. We don't see anything too significant that's negative news that would cause the market to push down extremely low. But for the upcoming week, this is what I am expecting to see happen. Again, MACD already seeing that convergence pushing down to the downside. So that's a quick analysis here on the 4-hour chart. That is our target zone right over here. Our resistance is still going to be at this 370 zone just because we have not broken it and we are beginning to sell off. So if we push back down to here, I do anticipate we push back up and see some more resistance right up here, unless we see some negative news that's going to drive the market to push down even lower. But that is going to be this general area. So back down to 360 and potentially back up to 370. And we're looking at QQQ, which is the NASDAQ. The SPY, which is the S&P 500, reacts just like this. So it's a very, very similar setup on the SPY as well, if you guys look at that chart. And then looking at a 15-minute chart, just to give you guys an idea of kind of where we've been and where we're at. Friday, we started to see a sell-off. Let me grab a drawing tool for you guys. Friday, extremely overbought on the RSI, and then we started to see a sell-off, and that was that first indication of potentially going in a short position here. And so we ended up seeing it pull back all the way down to almost oversold territory, but we haven't hit that yet. And so in after hours, we saw a little bit of a push up right over here, which indicates that we might potentially see another leg lower, at least into the open here on Monday or on Tuesday. Monday, because we have the market closed, it's a little difficult to say. Usually we use Monday throughout the morning. We'll use that direction to help guide the rest of the week. However, since it is a extended weekend, we didn't end up seeing any price action on Monday. So we're just going off of what we saw on Friday. So overall, we're just using the bigger picture for now. On Tuesday, when the market opens, we're going to be able to see a little more clarity as far as price action goes to see where the direction of the market is headed. But in the grand scheme of things, we are at that resistance level. We were at that resistance level here on Friday. So seeing some selling going on after that is something that we are anticipating. Now, looking at the big picture, just to give you guys some levels to pay attention to, you guys do know the first level that we're watching down to the downside, which would be that 360 zone. But if we do continue to push higher, which I don't anticipate we're going to see in the next couple of weeks, but if we do continue to see higher and I'm wrong, we're going to be looking at 400 to 405 as that next level to the upside. To the downside, that first level is going to be that 360 zone. If we break that 360 support zone, we're going to be heading down to this 336, 337 zone. So those are some levels to pay attention to the upside and to the downside. Again, our thesis is that we are going to see a sell-off happen at least down to this 360 zone, and then we'll reevaluate after we hit that zone and see how the market reacts to this supporting trend line. But that is our thesis as of right now going into the week. And those are the reasons why. Extremely overbought. MACD is starting to see convergence. We've hit a resistance. The Fed has already announced a pause. So that hype and the excitement around that, we've seen that priced in already. But the fact that we are seeing Jerome Powell testifying this week as to why he made the decision, and he's just going to reaffirm the fact that we are still in need of potentially seeing more rate hikes, I think that's going to cause a little bit of a negative impact on the overall market, which is going to cause some selling. Speaking of economic events and events that are going on this week, let's go ahead and jump into that and go over what we're going to see with that. Today is Monday. We didn't see anything going on in terms of economic data. Nothing worth noting. It was a holiday. And then Tuesday, what we're seeing is the building permits for the month of May. That's going to be an important one to pay attention to. Wednesday, we have Jerome Powell testifying in terms of why he made the decision that he made, or why the Fed made the decision that the Fed made in terms of pausing, and what they anticipate in the future, which is where I assume that he's going to be talking about future rate hikes, which I think is going to be acting as a negative catalyst for the overall market. And then we have some more Fed speakers throughout the day. For that, we have Governor Jefferson testifying as well, and Governor Cook testifying. So we also have some FOMC members, Mester speaking. Again, just a lot of speakers going on Wednesday. Thursday, we have our usual continuing jobless claims and initial jobless claims going on. Those are going to be important to pay attention to. Existing home sales for the month of May. More testifying from Jerome Powell. Mester speaking again. And then we have crude oil inventories being announced as well. And I think that is going to be the big ones, as well as the Fed balance sheet that's going to be announced as well. So that's Thursday. And then Friday, we have the services PMI. That's pretty much the biggest one to pay attention to. And then we have some more speakers speaking on Friday as well. So that is what's going on for the week with key economic data. That is a quick breakdown for you guys of the technicals on the chart and why we're paying attention to what we're paying attention to. We are looking at the daily chart for the overall picture right now. And I do want you guys to note that this line right here is the mean. This is the +1 and this is the +2 standard deviations. So that is just another reason that we are having a thesis that we're going to start seeing a sell-off. And that's because of that +2 standard deviation. If you guys know about standard deviations, you guys know that that is a good point at which the market will potentially reverse. +3 would be very, very significant, but we oftentimes see that reversal happen at +2 or -2 as well. So that's just another thing that's going to add to our thesis in terms of seeing some selling going on this week, at least to this 360 zone to be our first target of support. So hopefully you guys found value in this video. If you guys did, we do these videos every single Monday night. If you guys aren't subscribed, make sure to subscribe, smash that like button, share this video with a friend, and I'll see you guys on next week's Stock Talk video.